Let's dive in and see what our markets are doing. Let's start with this corn market. And is it hanging on to those gains that we had at the early going? Well, yes. May 12 higher, now 12 and a quarter higher. We're now at 737 and a quarter, and we're still, well, my gosh, we're still about 15 cents away from our overnight high, but double-digit gains for the time being. December is dragging its feet, though, again. We're 5 3/4 higher at 6.15 per bushel. On the soybeans, well, soybeans have a little bit of a gain today. The May contract 8 1/4 higher at 16.71 1/4. We're actually only about 6 cents from the low of the day at this point, so keep that in mind. Also on our new crop November contract on the beans right now, let's see what they're doing. We currently have them trading at 14.59 1/4. Only 6 3/4 higher for the time being. Chicago wheat went surging ahead again this morning. We have that May contract now expanded limit up 75 cents higher at 11.34. The other months not nearly as strong, just like yesterday where you had the December weaker while you had limit up trade on the nearby. May Kansas City wheat 56 1/4 higher at 11.31 1/2. Same story. The far out December only 6 higher. Spring wheat trade. You now have the May contract 38 cents higher at 10.96 1/4. December only up 6. And for those of you watching the cotton market, well, here you go with, we'll go with July. It's up 113 points at 116.21, and December up 103 at 101.84. Robin Cross joins us now. He's with StoneX in Chicago. He's our resident lumber expert. And lumber making big moves again here, Robin. Every time we have you on, it seems like they jump to attention. What's going on?
Of course. You know how that goes, buddy. If there wasn't big moves, we wouldn't have any moves at all, right? So we'll dive into it a little bit this morning. So prices right now, you got March, your expiring month, sitting at 14.43. That's up 24.30 with 53 trades over there. We only had about 355 to get out of before expiration, so not much with as many days as we have left. May is currently limit up yet again, 17 in the pool. That's now your lead month. That's at the price of 13.70. So it's pretty significant over there. In July, you know, it's worth mentioning is sitting at 11.71.90, up 42.70 over there. So, you know, I mentioned about our limit up and limit down percentage, and I see in your grains and stuff, I've been watching them as well. And, you know, obviously limit moves are in all markets, but like I said, it's between 1% and 2% maximum for the year. Last week I mentioned on the air that we were at 91% for lumber, so you want to scratch that if you're keeping the tally. We're at 93%. Out of the last 30 days, we've been limit up or limit down 27 times. And obviously the Merck's defense in that is on May 7th, they're going to expand the limits from 45 to 57. So I just want to, make sure everybody knew that information. And then, so just talking about the move, I mean, we had a triple top. The market failed 3 times, if you remember. At the beginning of March, 13.38. Then we put in another high at 13.36, then 13.31. So you really kind of had a ceiling on this thing, right? We finally poked through that ceiling. So now that ceiling has become your floor, right? So the market's, it's been up. It's crazy. But, it makes me think about this game we used to play in the schoolyard on the south side of Chicago. We would play this game called Big Bank Takes Little Bank, right? And this is the first time in going on my 26th year that there's literally absolutely no speculation in the lumber market whatsoever. And that's because obviously we have near 10,000 one-lot margins. Even in the big guys have been reduced. Even the normal 10-lot guys have now become one-lot guys due to the extreme price of this market. And everybody knows in the back of their mind, lumber's not worth what the board says it is at this time. Everybody knows this. You have interest rate rising. I'm definitely seeing a slowdown on the housing side of things. But like I said, because the margins are so high, no one's really keeping the mills honest in here. And if you look at the last 3 expirations, it was the same setup. Shipping problems, can't get product to market, can't get product to customers. And, we've been continuously to see that for a while. And then what happens? The day after expiration, all of a sudden, you see the mill list, 200 cars on there ready to go. So I kind of feel like, I don't want to necessarily say it's games, but I definitely feel like there's some, I feel like they kind of hold back and embellish the transportation, because I'm starting to see it. I looked at export sales, and it seems like it's moving a little better than it has, where I don't think, $1,500 pricing is warranted at this time. So I would still be defensive in nature. And I'd say, go over to the options market. But the problem is when you, like we were talking about last week, Marlon, when you're trading at, 75% volatility, It's so expensive, so that's why you're seeing why it's trading, why it's going limit up and limit down so much, because people are reacting as opposed to thinking it forward and, making a sound plan going into the market. It's just total reactionary trade. And hopefully we get a little cool off after March expiration next week on the 15th.
Yeah, that's going to be very interesting once that goes off the board and the May moves up to the top line. Interesting stuff, and we're actually just kind of testing or challenging those highs that we had about a year ago at this time when Robin and I were talking at length. It seemed like every time we were on, we were in uncharted territory. So now it's looking very similar once again. Robin, thank you for all the information. Great to hear from you again. Have a good week. Robin Cross of StoneX, he's in Chicago. We'll take a little break right here. We'll come back and take a look at the latest in the cattle and hog markets after this.